All right, what is going on, my friends? Happy Friday. Hey, real quick, do me a favor here in the chat. Just give me a thumbs up or something. Let me know you guys can hear me okay. I totally forgot to double check the sound before I hit live. I was running a little bit behind tonight, but yeah, let me know. Let me know if you guys can hear me okay. I'm sure everything's good, but just want to double check real quick. While we're doing that, my friends, welcome back to another Dividend Happy Hour episode 106, right? Yeah. Starting to get up there, guys. But hope you all had a great week. Kind of an interesting week on the stock market for sure. Looks like my portfolio ended up a little bit down compared to where we started the week, but really nothing too bad, right? Yeah, so very, very interesting week overall. I mean, I guess I pretty much say that every week because they all are. They all are very interesting weeks. But anyway, my friends, I'm so stoked to be back with you for another week, for another live stream. I was really looking forward to this one. And before we get into our shenanigans for the evening, I want to know a few things from you guys here. Oh, actually, we need to do a quick cheers. Sorry. So grab whatever it is you're sipping on real quick. I just got some water over here. Grab whatever it is you're sipping on, guys. Here's to you. Thanks so much for tuning into the Dividend Happy Hour and spending this next hour with me. It's going to be a fun one. So here's to you guys. And also here's to the dividends. Here's to the pursuit of that sweet, sweet cash flow, because that's really what we're all about here. That's really what's bringing us together. So here's to that, and here's to you guys. So now I want to know a few things here in the live chat. Number one, I want to know which stocks did you guys buy this week? What did you end up picking up? Number two, what are you sipping on tonight? What did you bring to drink to the Dividend Happy Hour? And number three, I want to know if anything cool happened in your guys' portfolio. Anything cool happened in your guys' portfolio this week? Did you hit any new milestones, any income milestones, maybe some new portfolio value milestones? Maybe some of you guys crossed that first 10K or that first 50K or $100,000 in the portfolio. Maybe you hit your 100th share of SCHD. Anything cool like that, I want to hear about it here in the live chat. Let me go through the chat real quick on that note and say what's up to everyone here. So personally speaking, though, guys, I picked up some Visa this week. Picked up about 1.5 shares of Visa. I'm just sipping on some water right here. Very, very boring, but necessary. So anyway, let me see. Let me scroll back up here in the chat and just say what's up to everyone. I see JC. I see Kevin, Dividend Rob, Intercomposed. Shannon's here, Charles, Dorte, Anthony's here, Shamizzle. Oh, Anthony, I've just read this. I'm really sorry to hear about that. Really sorry to hear that. That's extremely sad. I hope you're doing okay. And I'm sorry once again. I'm sure that's not an easy thing. The Lean Mean Dean Machine in the building. Good to see you, my friend. El Dynamico's here. What's up, Antonio? We got Pat, Chris. I think I already said what's up to Charles. If not, Charles, what's up, man? Andrew's here. Cam is here. Soul. SVFCEF. Okay, nice. Good to see you. In no way affiliated. Wow, interesting. Very interesting. Okay. What was I going to say? Anyway, whatever. Adon's here. Subneno. Good to see you. Oh, no, Sabaneno, good to see you. Nort is here. Nort Torres. We got James, Sophia, Run DMS, Living on Cash, Courtney, Big Bad David Clark. Good to see you, man. Azar's here. Jana's here. Yeah, it's been a heck of a week, to say the least, for sure. PJ's here. It's 2 a.m. 2 a.m. wherever PJ is. Nice. Dividend Diaries here. Good to see you. Yeah. Chris said Ryan hit over 60K subscribers. I did. A couple days ago, we hit the big 6-0. So thank you guys. With that said, thank you guys for all of the support. Thank you for helping me hit that. Well, and just continuing to hit new milestones and new benchmarks, not only on the channel, but in the portfolio as well. None of this would be possible without you guys. So thank you so much for everything. I truly mean that. And I did want to say too, it's just as far as the Dividend Happy Hour goes, if this is any of your guys' first time tuning in to the live stream, just so you know, we do this every Friday night at 5 p.m. Pacific time, 8 p.m. Eastern time. But the Dividend Happy Hour is a weekly occurrence unless for some reason I'm out of town or for some other reason just not available, which I'll always let you guys know in advance. But anyway, if this is your first time tuning into the stream, let me know here in the chat. I'm curious to see how many first timers we got here tonight. But anyway, getting back to it, I see Salvatore. I think I'm already said what's up to you, Salvatore. But if not, what's going on, my friend? JC here picked up some Ford. Very interesting. Very interesting buy. SHD stands in the building. What's going on, my friend? Yeah, there we go. James here. Glad I caught a live stream. I hope all is well. Still going strong with the 5 funds. Well, yeah, they're not all funds, right? I mean, Realty Income's a stock, but the rest of them are funds. VU, QQQ, SCHD, and SPYI in dollar cost averaging daily. Almost 900 big ones coming in dividends. That's great. Almost to that $1,000 per year mark. That's huge, James. So good job, man. Keep up the good work. Let's see. Looks like Intercomposed picked up some Visa. That's a good buy. Janus, 10 shares of IDUS ETF. Nice. Salvatore, I know it's not a dividend stock, but can you take a look at DKNG? I think that's DraftKings. Yeah, we can take a look at it. Here, I'm going to star this so I don't forget. We'll take a look at it in just a few minutes. I'll circle back to this. Who else we got? I see Joseph picked up some SHD. Alien Head. John's here. Rebalanced to QQQM. There we go. In no way affiliated. Sipping on bourbon and investing in ammunition. Nice. That's funny. There we go. Let's see. I see the S&P 500. Some more SCHD. Let's see. Shamir's been on a hiatus from the buying lately. Sipping on Coke Zero. Eating Hershey chocolate. Nice. Supporting 2 out of his small handful of stocks. Good stuff. Tommy, we're sipping a protein shake tonight. Nice. Let me know what's in the protein drink. What you got over there? Picked up some Vici. Nice. Good stuff. El Dynamico, sipping some coffee. Picked up a couple shares of Starbucks and a few more shares of JetQ. Okay, nice. Yeah, Chris went on we were messaging about this on Instagram, went on a really big shopping spree. So VU, SCHD, NVIDIA, Microsoft, Visa, Apple, and BTI, British American Tobacco. Nice buys. Charles also had a pretty big shopping spree, it looks like. Oxy, SYF, which I'm not familiar with. SCHD, SCHG, SPLG, Kenview, and Citigroup. Nice. A lot of buys there. Dean with some Chevron, T-Rowe, and Horizon. I see some more Vici. I see some more British American Tobacco. Let's see. Yeah, some more SCHD and big. Looks like a pretty big week for Jana here. 10 Main Street, 10 Realty Income, and 10 SCHD. Nice. There we go. Let's see. Let's keep going. I see Jim here and Manuel. Good to see you guys. And also Minaj. Good to see you. And Sir Dude Bro, man. What's going on, my friend? Yeah, I know. Things so crazy that on Monday I went off schedule to do an emergency vid. Yeah, I know, man. When in Rome, or I guess when the opportunity presents itself. Yeah. Yes. Okay. Big week from Dave. So sold out of 3 losing positions and reinvested in existing positions. PFE, BNL, and started position in WM, Waste Management. Also drinking water. Nice. Very nice. Okay, we got Heather in for the first time. Minaj is here for the first time in the live stream. Well, welcome, guys. I hope you enjoy this, and we'll run it for an hour. So we'll go to about 6 o'clock. Typically, I mean, you guys know me. Typically, it's usually a few minutes after, just depending on what you guys get me talking about. Let's see. Yeah, Russ will like this one. Trista picked up some Nexstar Media and Cintas this week. I was looking at Cintas. I added it to the watch list recently. Really solid company. Really solid. Let's see. Let's keep going. Jim with a couple big buys, MFC and DE, which is Deer. Nice. Trista with the Muscle Milk. Muscle Milk is classic. That's kind of cool. Charles made it to 200 shares of Aries Capital. Nice. Good job. Let's see. Steve here. Do you invest at all in the Bitcoin ETFs? I took profits and invested in SHD. No, I have no exposure to cryptocurrencies whatsoever. But that's interesting that you took profits and invested in SCHD. Were you just not, I mean, as far as Bitcoin goes, did you change your thoughts on it at all? Like what caused you to sell completely out of the Bitcoin ETF to put into stocks? I'm curious to know. This is an interesting question from Salvatore, and I still have one starred, which we'll go back to. What do you do when a stock is overextended, but it's a solid dividend hold like Procter and Gamble? By overextended, do you mean it's overvalued, or do you mean it's like too big of a position in your portfolio? In either case, I probably would just hold on to it. Like in my portfolio, Williams Sonoma, has run up quite a bit, to the point where it's become one of the top 5 in my portfolio. And it's also one that's, you could probably make the case that it's definitely gotten out of fair value range. So, but in both cases, I'm just still holding on to it. I still think it's a great company. And at the end of the day, I think that's probably what you should focus on. Is this still a great company that I want to own? And if that's the case, then, you might as well hold on to it. Especially if it's, continuing to pay and growing dividends. You're still collecting that cash flow. It's still a great company. So there's probably not much of a reason to sell, in my opinion, unless you find better opportunities elsewhere. And it's, then maybe that's a different story. Let's see. Okay, Salvatore. So here was that question from you earlier. I know it's not a dividend stock, but can you take a look at DKNG, which is DraftKings? And I got to say what's up to my man, Chris Haynes there. I see you. Big gamble on XRP. Thanks for tuning in, Chris. Good to see you, man. Hope you're doing well. Okay, so we're going to go look at DKNG. Let's jump over to Seeking Alpha, DKNG. So we'll take a quick look. Just take a quick look through some of the financials real quick. And I've never looked at DraftKings, but fun fact, it's not their headquarters, but one of their big offices is kind of like right down the street from where I live here in Vegas. Definitely not their headquarters because it looks like that's in Boston, but kind of fun. Big old DraftKings building, really cool. And it's like brand new. So, okay, so we're over here looking at the income statement, which only goes back to 2017. And in that time, it's they've clearly grown a lot. Clearly a lot of growth from this company. Gross profits have really jumped off, which is not surprising to see when a company's in this stage. It's not surprising to see the margins go down or not look too good. It's just, that's not their biggest priority at this point. The biggest priority is to drive sales. Profitability will come over time. And similarly, when we're looking at this operating margin and the net income margin as well, we'll see that they're losing money. But once again, for a business that's in the stage that they are, kind of early in their growth cycle, in their aggressive growth stage, I should say, it's not surprising to see this, the net income and operating margins in the red there. So, it's at this point that it gets to be a bit outside of my wheelhouse, because from here, I'm just not sure how you would measure the quality of this investment. Is it sales? Is it just looking at sales is what you're looking for? Because in other instances, like if we're looking at a typical dividend paying company, we want to see not only growing sales, but growing profits, growing free cash flow. And a company that's here in this stage is not going to have those things. So this is about where it gets. Actually, it looks like they do have a little bit of free cash flows of last year, but this is about where it gets to be outside of my wheelhouse. And I couldn't tell you, I'm just not well versed enough in this type of company to know if it's going to be a good investment. But I would say, like, yeah, I'm just going to leave it there because it really is outside of my wheelhouse from here. So I know that really didn't offer too much for you, but that's kind of the best response I have on DraftKings. So, anyway, let's keep going. Let's see. Yeah, Steve says crypto's not for the faint of heart. Not even the ETFs. I didn't sell all just profits. I was Oh, I didn't sell all, just profits. I was up over 100%, so I decided to be cautious. I get you. Okay. Um, the biggest thing to worry about is if they make a law that makes it illegal in the US, could kill your dividends. What I wonder, is this in reference to crypto or what is this in reference to? Let's see. Can you take a look at PLD, which is Prologis? Yeah, sure. I'm going to star this next comment. Star this one as well. So yeah, can you look at PLD? Let's take a look at that real quick. So Prologis is a real estate investment trust, guys. And we'll jump over to their website real quick just to get a little sample of what type of real estate they're about. So logistics real estate, where they focus on high barrier, high growth markets. So looking at this, you can probably get a sense for what type of buildings they own. Definitely very industrial, right? Warehouse type stuff. So, and I think, is it Prologis? I think Russ maybe works or has worked in some of the Prologis buildings out in Chicago. I could have that wrong. I do remember driving by a big Prologis building here in Vegas a couple of times, kind of by the airport, or actually kind of like you're going to South Point, excuse me. But anyway, let's jump over and look at the financials real quick. Sorry, guys. So, first things first, revenue's looking good. This seems to be a pretty growthy REIT. Revenue's definitely taken off over the last decade. I mean, even the last couple of years, it's still seen pretty aggressive growth. If we go to the bottom line, looking at the FFO, there's been a few years here where it wasn't reported by Seeking Alpha. So that's kind of tricky. But for what they do have, it still, the growth looks pretty good here. FFO per share, nothing. I don't know why. I'm not sure why these are all blank in here. No FFO payout ratio would be helpful to have that. I mean, solid dividend payer, obviously, right? Like classic dividend growth stats, nice 3% yield, 12.6% 5-year growth rate, 10-year dividend growth streak. I think all that looks pretty good. Yeah, what's going on with this? I don't know why they have those blanks there. FFO growth. So this is good. I would say this is good right here. Pretty aggressive FFO growth over the last 5 years, a compound annual rate of 13%. So that looks good. That looks good to me. Yeah, I think Prologis is a pretty solid REIT. Yeah, looks like a high multiple is going to be much higher than what you'd find with like Realty Income, which I think is in the 14s, right? 14.3. Where's Vici at? Vici's multiple is 11, so 12. So it's even cheaper than Realty Income. Yeah, so PLD is growing their that's the dividend growth rate, excuse me. FFO growth. So, not too different, right? So Vici's FFO growth over the last 5 years was 11.6%. That's not too far below Prologis. And you're getting, it's like less than 2 percentage points below Prologis on average over the last 5 years. And Prologis has like almost twice the P to FFO multiple. So that's very interesting. And Vici has the considerably higher yield as well. Vici's is maybe 5% right now, 5.5%, maybe 5.3%. So you're getting a much higher yield with Vici, much lower multiple, similar FFO growth on average over the last 5 years. PLD does have the higher dividend growth rate. I think it was 12 point something percent compared to Vici's, which is in the 7s. Still pretty respectable, so, but yeah, I think Prologis looks solid. It's just a bit, I guess, pricier when you look at the multiples. So, real quick, shout out Tess for the $20 super sticker. That's very, very nice of you. Thank you for doing that. Definitely did not have to, but thank you so much. That's awesome. I wanted to scroll up in a couple comments that I started here. So this first one was from Wubs For a first-time investor, would you suggest SCHD or JEPI? Yeah, I would definitely go. I would definitely go with SCHD. If you're a first-time investor, I think SCHD is going to be a lot more straightforward, a lot less complex than something like JEPI. And personally speaking, this is just my preference. I actually wrote about this in this week's newsletter. But personally speaking, I tend to stay away from covered call ETFs altogether. It's just my personal preference. So I guess I am a little bit biased as well in saying that I'd probably opt for SCHD, especially considering I buy SCHD personally every week. So I am going to be a bit more biased towards it. So, but yeah, for a first-time investor, I'd just keep it simple and not explore covered call ETFs yet. So, but anyway, Tess, who gave us that nice super sticker there. My first time here. Been watching you for a month and have been frugal lately, saving money. Thanks for all the advice. You're the best. Well, thank you. I really appreciate that. And well, been watching you for a month. Okay. Good job saving money and being frugal and stuff like that. Keep up the good work. And thanks for all the support. I want to remove that. Let me find out where I'm at in the chat here, because I think I'm a little bit behind. Okay. Okay. I think I'm finding out where I was here. Okay. Let's see. Okay, Steven says, love the content, just discovered your channel. What are your thoughts on CHRD Energy? Okay, I've never heard of this company before, but they reinvest 75% back into shareholders with buybacks and special dividends. Chord Energy Corporation. Okay, let's jump over here. So I just landed on the dividend stats page. High yield, right? 6.65%, very low payout ratio, and 2 years of dividend growth. Let's take a look at the dividend history. Actually, we're gonna do this right here. So the dividend history has been a bit all over the place so far. Yeah, interesting. I mean, we'll see how things play out from here, but this might be an anomaly year. But even so, from 2021 to 2023 minus 2022, this was still a pretty big jump. This was still a 100% jump in dividend payments. So I don't know. The 1 year. Well, yeah, obviously. I don't know. Based on the dividend history so far, it seems a bit all over the place, which is a bit concerning to me. It does look like the margins have gone down over the years, going from 80s to 70s to 60s to 50s to 40s to 30s, then back up to 50s and 60s. So it's been kind of all over the place, but in their own right, these margins aren't bad. And I guess minus 2014 and 2015, it's been pretty stable between the 50s and 60s, with the exception of a couple years here. But more often than not, it's 50, 60% range. Operating margins kind of been all over the place as well. Net income margins been kind of all over the place. So I don't know. I don't exactly know what to make of this company. I mean, everything's just all over the place. Shares outstanding were really high. Then they bought back a ton of shares. So I don't know. I honestly don't know exactly what to make of this company. There's kind of a lot going on. What do they even do? An independent exploration and production company. Okay. It acquires. Okay. In the Williston Basin, sells its products to refiners, marketers, and other purchasers. It seems like an interesting company. And if things play out this way, that's pretty solid. So I don't know. I don't really know what to make of this company. I'd have to spend some more time learning about it and thinking about it to really give a better answer to this. But my initial impression is that it's all over the place, and that's a bit scary to me. But I mean, energy is definitely a necessary industry, so there's that. And I'm going to apologize in advance, guys. The lighting so far has been really good. It's been very cloudy here in Vegas today. It looks like things are starting to get kind of sunny, so we might see some light popping in. If that ends up with the spots on, kind of like you can see back there, that might start happening on my face. I apologize in advance if it does. But yeah, Steven, I'm sorry I didn't have a better answer for you with CHRD. So. Good question from Shannon here. So, what is your thought process when you want to start a new position, but you feel like you do not have any good options to select a new position? So, this is a really good question, and I think that my initial reaction is to say, at least this is how I kind of operate, or have been. I don't really go out of my way to look for a new position. I think I'm and this might change over time, but I'm kind of the opinion that it's better to let new positions come to you. I think it's good to just keep your eyes. How do I say this? I think it's good to have a process of looking for new stocks or building out a watch list. I think it's good to always keep your ear to the ground, I suppose. But how do I'm tripping over my words. So I apologize, but let me think about this for a second, because this is a really good question and I know what I want to say. I just don't know quite how to say it. And yeah, I'm sorry for the light, guys. It's getting pretty rough. I guess what I'm trying to say is I wouldn't go out of your way to start a new position. I would figure out what your criteria is for a stock to make its way into your portfolio. I think it would help to establish some sort of criteria for what you're looking for. And so for me personally, just very high level, I'm looking for a company that is growing its sales with margins that are at least stable or growing. A company that's growing its sales, its earnings, its free cash flow. Talked about the margins. A company that doesn't have too crazy debt, one that I can understand. I'm looking for a combination of these sort of things quantitatively, while qualitatively looking for something that I understand, that I think has staying power. I can understand why it might have staying power and, tailwinds to continue growing, stuff like that. So once you establish that sort of criteria, that's going to give you a sense of direction and what to look for. Now, from there, once you have that sense of direction, one thing that I found really helpful is to have two separate watch lists. So I have lists of companies that I want to buy. For sure, I know I want to buy these companies based on the research I've done into them so far. The only one on this list is Rollins, okay? And for me, probably at any given time, there's going to be one or three stocks, probably not much more than that I'm certain, yes, I want to buy this. Well, maybe so. It just depends on how many I research, how many pass the sniff test, and how many are in, have good valuations. But anyway, at this point in time, I only have one company that I'm sure that I want to buy, but it's not at a price that I want. So it sits on this list. It's very much in limbo. I also have this second list of companies that I might want to buy. So these are the ones that I've maybe just glanced at them enough to know what they do and have a very rough sense of their financials to know that this probably loosely fits the criteria. These are the ones that I want to explore further. And then from there, if I still like them after going through them, these are the ones that I essentially will want to do deep dives on. And if they make it past that stage, then they'll be moved to this companies that I want to buy list. And so at any given time, me personally, I have this running list of stocks that I'm considering, the stocks that I know I want to buy that I'm just waiting to be at the right valuation. And that's kind of my, I guess, funnel of sorts when it comes to new companies or new positions. So to answer your question and going back to it, if you want to start a new position, but don't have any good options to select one. Don't force it, I guess, is really the right answer. But, in anticipation of you wanting to start a new position, or just like, in terms of building out your process as an investor, uh, because that is one of the few things that you can control with all of this is your process. I would highly recommend establishing something like this, because this will help you this will help develop some sense of direction and some sort of focus in the companies that you're looking at. Because you don't need, like, I have another watch list just of all dividend paying stocks, and you really don't need to have a watch list that's this extensive. This is going to be extremely overwhelming. So I found that it helps to have a more focused list of things that are within your wheelhouse and past your the initial things that you're looking for. And then from here, just start going through these one by one. Go through Air Lease and American States Water and Casey's General Store. Go through these to see if they ultimately are ones that you want to buy. Establish a fair price for them, and then add them to the companies that you want to buy list. Add them to your for sure list, and then from there, it's just a waiting game. It's just a waiting game for the stock that you want to be, to get within buying range. And that's like the final stage, right? Of you starting a new position, is just knowing what companies you want to buy and waiting for it to be at the right price. And sometimes it just doesn't get there. Sometimes, like, I've been waiting on Rollins I've had opportunities that I didn't take advantage of, but I've been waiting on Rollins for years, and it's just something I'm not going to force. So I know that's a very roundabout way to answer your question, and I definitely tripped over my words there. But hopefully all of that made sense and kind of gave you some clarity on the whole thing. In a nutshell, just in closing, don't force it. If you feel like you want to start a new position, maybe you're just, getting bored. I've found that lately there's positions, I kind of was saying this earlier on, and anyway, but there's been some, like the last couple that I have the last couple that I've added to my portfolio, the Vici Properties and Williams Sonoma. Well, Vici Properties, Visa, and Williams Sonoma. I didn't feel like any of those were forced. Those kind of all just randomly came to me. Like, I randomly had a thought that, oh, Visa's an interesting company. And I don't even remember what it was that sparked that. But there's these random things that happen as you make your way through life that might spark an idea. And I've had a few of those that have turned into the recent positions that I've added. Williams Sonoma, like, I think I was maybe walking through the mall one day and saw a store or saw a Pottery Barn or something like that. And then one thing led to another. And then what's another one? Vici is one that I've like gone back and forth on forever. And for me, it was one of those that like it wouldn't leave me alone. Like, I decide I wanted it, then it would go away. Then I wanted it again. And I just kept coming back to it, which told me, yeah, there's probably something there. So, sometimes they just, they find you. And I think that's kind of the fun. Sorry to go off on this tangent. I think that's kind of the fun of this whole thing is just through osmosis, like just through, staying in the loop and staying engaged as an investor, and just, paying attention throughout life, wherever you're driving or walking or the things that are around you, you'll randomly get these ideas. And I think it's so cool when that happens. That's like my favorite way to find out about a new stock or a new investment. So hopefully all that makes sense. And I think, last thing, I promise, I think moving forward, like that's probably how I'll like come across new investment ideas and new ones to add. I'm just kind of going to let them organically come. So let's see. Yeah, Shannon, that would made me think. Okay, can you look at AGM stock? Okay, let's take a look at it. And no, you said, I hope I'm not annoying. No, not annoying at all. I don't remember. I don't think I saw your first comment, so I apologize for skipping over it. And that's just, let me put that apology out to everyone. If I skip over your guys' comments, I sincerely apologize. It's not on purpose. This is a good thing. Sometimes the live chat, it's gotten to a point, depending on how many people are in the stream, where it's really hard to catch everyone and keep up with everyone. And as you guys know, I like to ramble on and I can get into sometimes 2 or 3 questions and there goes the whole live stream. But anyway, AGM is Federal Agricultural Mortgage Corporation. I can tell you just based on the name, this one's going to be probably over my head a bit. Oh, this is Farmers Mac. Okay. Well, yeah, it still probably is. So it buys loans made to borrowers for farms, corporate ag finance. Oh, secondary market. Yeah. Okay. I'm really not the best person. I'm really not the best person to ask about this. This is probably going to be outside of my wheelhouse. But let's take a look at the financials just for fun. I mean, we'll just take a look at it. Revenue's obviously growing. It looks like it's tripled over the last 10 years. Really high margins for sure. Come on. Okay, whatever. Yeah, net income's growing. Earnings look like they're growing. Dividends obviously grown pretty well. Payout ratio has been good over the last 10 years. Increased a little bit midway through the decade, going into 2020, it looked like it was on a steady rise, but it has since started to come back down. So that's good. Probably going to be low debt if I had to guess. Maybe negative. No. Well, $27 billion of net debt against, and that debt's going to be long-term because I'm guessing they borrow. Let's just take a look. Let's look at this balance sheet. Where's the liabilities? Okay. So where's all this debt? 27 billion in debt. I'm looking for their liabilities. There's total assets. What am I missing here? Long-term investments, loans and lease receivables. Total assets is 30 billion. I'm trying to see how the total liabilities add up to almost 30 billion, but there's there's debt down here, right? But it's not listed up here under the liabilities. I would have thought it would be. But anyway, current portion of debt is 6.7 billion. So that's due within the year. And also these short-term borrowings, these are probably due within the next 12 months too. So a decent amount of short-term debt or short-term liabilities, current liabilities. Yeah, I don't know. I'm just going to stick to my original statement and say that this is probably something that I don't fully understand. So yeah, there's a lot going on with the debt side of things that I just don't quite get. But I'll tell you what I do know. The dividend stats look pretty good, but that's about all I can tell you. I mean, earnings look like they're growing, revenue's growing. I just don't really know how to look at their debt situation. And that's going to be a pretty important piece to this. So Kelvin, does it bother you that Starbucks retained earnings has been negative since 2019? No, it doesn't. One thing too that you hear a lot about Starbucks is that they have negative shareholders equity, and McDonald's actually has the same thing as well. So that's something that is common between those two. I think it's here. Yeah. So, but no, it doesn't bother me that Starbucks has negative retained earnings. Let's see. Let's keep going. Oh, there we go. Hi, Ryan. It's Friday. This week I bought Visa. Good list of stocks here. Visa, LVMUY, Starbucks, and Microsoft. Nice. Good moves. Yeah, this is another good question. What are your thoughts on Realty Income now that the price is about 60? Yeah, I think it's probably a hold from here. I mean, if you bought it now, you'd still be generating some nice cash flow for sure. But personally speaking, I'm just holding Realty Income for now. I have just over 100 shares. It's a pretty decent sized position, and it right now it generates the most amount of income across any holding in my portfolio. So I'm good just chilling on it for now. But yeah, I think 60 is a good price to hold and wait and see. I think when Realty Income starts to get like to the mid 50s, low 50s, obviously below 50, then it starts to then it looks like a pretty good time to buy around there. That's been about a pretty good place to buy. But if it's about 60, I'm just kind of holding strong. Yeah, this is a really good question. So I'm actually going to screenshot this. This is from Valiant Valrin. First time investor. Do you have a checklist on what to look for in dividend stocks and where to find the info? So if you actually go to my channel, I have a video titled something like my foolproof method to pick winning dividend stocks or something like that. Just go to my channel, foolproof method. There's going to be a video that pops up, and it pretty much covers this exact thing. But in a nutshell, it's some of those things that I was mentioning a few moments ago earlier in the stream. I look for growing sales, growing earnings, ample free cash flow to cover the dividend. I look for a company that has manageable debt. Ideally, I'm looking for like a net debt to free cash flow about 5 or less. There's a little bit of wiggle room in there. But that's kind of in a nutshell what I'm looking for. If I'm looking for if I'm looking at a dividend growth stock, I'm okay with seeing a low yield, like even, Visa's below 1%. I'm okay with that if I get a high dividend growth rate with that. So I think the yield and the growth rate have to balance each other out. So if you have a really low yield, it's not going to be interesting to me unless there's a high 5-year growth rate. And on the inverse of that, I'm okay not seeing as high of a 5-year growth rate, 5-year dividend growth rate, if the yield is on the higher end. So like when it comes to a company like Enterprise Products Partners, for example, whose yield is above 7%, so a high yield, I'm okay seeing a dividend growth rate that's maybe 2 or 3%. So for me, that's kind of the trade-off. And so in a nutshell, those are just a few of the very basic things that I look for. Is the company growing? Do I understand the company? Is the dividend safe and growing? Like those few things, just very high level. That's kind of what I look for. But go check out that video. It's like my foolproof method for picking dividend stocks or something like that, and you'll hear me talk more in depth about all of those things. So, really good question, though. Thank you for asking. Okay. This is an interesting question, and I get this one from time to time. Yeah, I'm sorry about the lighting, guys. It randomly got very sunny in here. Vegas is so weird like that too. The weather is so flippant. Okay, so what do you think of being in the stock loan program? So basically, what this is, I believe, like if you use Robinhood or something, you can actually lend out your stock to short sellers who will borrow it, short a stock. I think let me know if I'm getting this wrong, but I believe that's how it works. So you can basically lend your shares out to people who maybe want a short stock or something like that, and then you get compensated a little bit for it. I'm sure it's fine. I don't personally know enough about it to really have a good opinion about it, but I'm sure it's fine. Like I'm sure there's. Let me actually look this up. Robinhood stock. Maybe we can consult the internet. So, okay. I think this is what you're talking about. So earn extra income. If we borrow your stock, you're paid monthly for the loan. If your stocks are on loan, you can still sell them and realize gains. Okay. Wholly owed shares. Okay. Who is borrowing? Your stocks are borrowed by Robinhood, including to facilitate trade settlements, onward lending, or to use as collateral for other loans. Okay. Okay. So other people can use the stock for a variety of purchases. like shorting. Okay, here's one of the risks. Their activity could potentially change the value of your holdings. Okay. Doesn't say anything about if there's like insurance on those shares or how, I don't know what you'd be insured for, but loans guaranteed, voting rights. How is loan stock protected? This is what I'm looking for. Okay. Okay. So they're not insured. So that is one risk. While the investments in cash you hold in your Robinhood investing account are typically covered by SIPC insurance, loan stocks are not covered. Instead, we use cash collateral to protect your loan stocks. This means that we aim to hold cash equal to a minimum of 100%. Oh, okay. So basically, if something were to happen to your shares, you would be paid the value of your loan securities in cash. If for some reason Robinhood went out of business, or you couldn't return, stocks can be returned to you. So that sounds fine to me. It sounds like either way, you're covered. So I think that's probably fine. That's probably fine. I don't see much downside to it at this point. I mean, I guess the risk would be just something happens and you don't get your stocks back, but you'll be compensated in cash for that. So seems like it can work out. It might just be a headache, going through the process. I don't really know what that looks like. So that could be something you'd have to deal with, but it's probably fine. Let's see. Yeah, this is an interesting point from John. They say people totally unrelated to anything we're talking about. I just saw it, but people are going back to they say people are going back to offices, although I don't think Realty Income has too much office space. No, Realty Income doesn't, but KRC does. I haven't talked about KRC for quite a while, but they actually had pretty decent earnings. I listened to the call, and one of the things that they mentioned a handful of times was how much leasing activity is going on. They're seeing a lot more demand in like San Francisco and Seattle are really starting to come back. People starting to come back to the office. So that's a good sign. And hopefully that continues. I'd love to see their occupancy get back up there. But yeah, that's good to see. I'm still holding strong with that one. So let's see. Interesting. Whole Billy says, my local bank is converting all debit cards from MasterCard to Visa. That's very interesting. Huh. Charlie, where was the honeymoon? So we went on a honeymoon a couple weeks back, and we went to Cabo San Lucas, which was a lot of fun. Oh, I meant to tell you guys. I meant to say this earlier. I finished this bad boy today. Just finished it maybe an hour before I started streaming. Deals from Hell by Robert Bruner. Really good book. This book basically talks about what to look for in mergers and acquisitions. And there's going to be a lot more applications. Like if you're an executive in a company, like the information here is probably more relevant to you. But I still think there were some good takeaways from for investors, because investing in companies that deal with mergers and acquisitions a good amount, even real estate companies, which, I mean, Realty Income, it's pretty much all it is acquisitions these days. Rollins actually very heavy on mergers and acquisitions. Berkshire Hathaway, that's all it is acquisitions. But anyway, this book will help you as an investor. It helps to, give you some of the things that you should be looking for that make for a good merger or acquisition, or make for as they call it, a deal from hell. So definitely some good takeaways for investors. This was actually one of my favorite books that I've read in a little while. I feel like prior to this, the last few books that I read were really below my expectations. I read, One from Many, which is by Dee Hock, who was the founder of Visa. I really did not enjoy that book at all. I also read The Great Depression by something Roth. I don't remember the guy's name. Something rather Roth. Benjamin Roth, I think was his name. The Great Depression, a Diary. Really didn't enjoy that either, but this one I really liked. I don't have it near me, but The Ownership Dividend, which I read on my honeymoon. That's what made me think about all this. Really great book as well. I think I mentioned that last week, but I highly recommend you guys check that out. This one was pretty good as well. So I'd recommend this one as well. Anyway, that's all I wanted to say about that. And then next up, guys, I'm actually not sure which one I want to get into next, but I have these two next on deck. We have Fooled by Randomness by Nassim Taleb, and then The Almanac of Naval Ravikant. So I'm not sure which one I want to get into next. I'm kind of thinking The Almanac. It seems this one's kind of been calling to me, so I think I might jump into that one. I'm excited about both, though. Anyway, that's enough book talk. Let's keep going. Let's see. Do you know why Starbucks is up after hours? Yeah, Starbucks is up because there was a new activist investor that initiated a position. That's all I know, but that's what caused the jump. So now there's two activist investors who kind of have their sights set on Starbucks. So we'll see what happens there. This is a good question. Do you think it's a good idea to own a top stock in each of the 11 sectors? I don't think it's absolutely necessary, no. And there's a couple sectors that I personally don't have exposure to through individual stocks. Utilities and materials, I don't own any. Well, actually, I think technology too, because I think Visa's in the financial sector. I don't think it's in the technology sector. But yeah, there's a few sectors that I don't personally have exposure to. Yeah, it is. It's financials. So no, I don't think you need to have exposure to a sector just to have exposure to a sector. And I think if you want diversification, it's probably easier to because that's why you would want to own a stock in each of the 11 sectors is for the diversification, right? But I would say if your goal is to build diversification, I would just do that by owning like an ETF. And then pick like a few individual stocks around that. So the ETF will provide the diversification you're looking for. And then you can make sure that the individual companies you own are ones that you're not owning just for the sake of diversification. If that makes sense. Run DMS said, "Hey Ryan, want to let you know I stopped drip and I'm using the dividend money to reinvest in the Biggest Loser quarterly. It could yield better with a long-term time frame." Yeah, perhaps. Let me know. I've never heard of someone doing that, but yeah, let me know. Let me know how that goes for you. Jay-Z says, "Should we buy dividend yielding stocks now, considering the economic condition? What would you suggest?" I mean, yeah, there's still. It depends which stock. I mean, there's definitely still some good deals, discounts out there. But yeah, I'm a proponent of pretty much always buying every week, or at least contributing to your portfolio every week. If not actually buying stock, then at least stacking cash and getting ready for the next buying opportunity. But either way, I would continue to contribute to your portfolio. And if you see good opportunities, then take advantage of them. But if not, then nothing wrong with building out some cash. So. Yep, there you go, Adon. It's been a while, man. It's been a while since there's another one. It has been a long time since I've brought up KRC. I almost did KFC. Let's see. Anthony says, "Shouldn't be reading on your honeymoon." Why? What's wrong with that? We were sitting by the pool all day, drinking margaritas, hanging out. Good book goes well with all of that stuff. And believe it or not, guys, I'm caught up in the chat now. G says, "Hopping in to say love the content, man. Keep it up." Thank you, G. G Unit. yeah, surprisingly, I am all caught up in the comments, and we've just got a few more minutes to spare. So yeah, this is a really good question, actually. George, what are your thoughts on Otis as a long-term hold? For a minute there, I was kind of interested in Otis. We'll take a look at it real quick. Jump over here. So, and actually, guys, to do this, we are going to, I'm going to hide this for a sec. I want to show you guys. I don't know if I showed it in last week's live stream. I showed it in my recent video, but let's check out Otis over here on, bear with me one sec. Okay, I think we're good. Okay. So guys, we are looking at Otis over on this new stock analysis software that I've been working on. This has been, I talked about it in my video from Monday, but this is something that I've been working on behind the scenes for the last couple of months now. Going to be rolling it out here sometime in the next couple of months. It's very much a work in progress, but let's take a look at Otis using this. And basically, guys, you'll see this is all very visual. It's all pretty much charts. In this platform, I'm going to be calling Snapstock. And essentially, the whole gist of it is to get like the full picture of a stock with a snapshot. So it's just all the essential information you need at a very quick glance. So it's got some good stuff like the revenue, earnings, free cash flow growth. How are things growing? As far as Otis goes, it's been, I mean, in terms of revenue, it's been a moderately slow grower over the last 10 years. It's the compound annual growth rate's only about 2.5%, but still it's trickling up. Earnings are growing by a much faster rate. So this company is or should be becoming more profitable over time. We don't see that here in the gross margins. The gross margins are pretty consistent, but the net income margin, and I'm sorry that the free cash flow margin chart's not loading. Still, like I said, guys, still very much a work in progress, and it will continue to be. This is just like V 1.0. It's not even V 1.0, but anyway, net income margin's been going up as well, or net income margin has been going up. The average over the last 5 years is about 9%. So a decently low net income margin, but this company is going to be pretty capital intensive. So it's not surprising to see these lower margins. As of now, the margins are above average. The net income margin's above average. And, gross margin's about in line with what it's historically been. So that all looks fine. $6 billion in net debt. I wish this would load. Maybe if we do this, I'll show the list. No, not working for us right now, unfortunately. Interest coverage still looking really good. Dividend yield looks like it's a bit above average. So the average yield is 1.13%. Right now we're looking at 1.6%. So that's good. Or this is at the close of 2023. Right now, the dividend yield is 1.5%. So yeah, pretty in line with that. Nice dividend growth, right? Really solid dividend grower. And shares have been, it looks like they're buying back about 1.25% of their shares outstanding on average over the last 5 years. So that's good. Really crazy. If this is right, really crazy returns on invested capital. Very crazy. So I don't know. That's pretty wild. So there's some good stuff. There's some bad stuff. When I was looking at it, we'll jump over to Seeking Alpha now. I want to see the return on capital. So yeah, that's really high return on capital. What was it about this? I think when I was looking at it, because I briefly for a moment had it on my watch list, and I think I came away from it thinking this was fine. This seemed like a fine company. But I think I came away from this thinking there were probably other things that I would rather invest in this industry, or in the sector, excuse me. And a couple examples of that would be like Rollins. If I'm going to buy an industrials company, I would rather buy Rollins. I think that's probably a steadier investment. Although I will say that one good thing about Otis is that they do have some nice recurring revenue coming in from the maintenance on their escalators and their elevators and stuff like that. So once they basically sell whatever the piece is, whether it's an escalator or an elevator, they'll try and upsell you on basically maintenance on that. And there are third-party companies like elevator repair companies or maintenance companies or whatever. But yeah, Otis actually has a service where they will maintain all of that for you. So offering that is some nice recurring revenue for this company. That is one thing that I liked about it. But I would say that overall, I was more partial to Rollins. And I'm even more partial, I would say, to something like RSG or Waste Management. Oops, not that. RSG is another one that's on my watch list, which is trash. Them and Waste Management are a pretty similar company. So very much the same idea. But anyway, nothing against Otis. I remember coming away from it thinking, yeah, I'd probably rather own these other companies instead. So, yeah, and I think, guys, this is a pretty good place to wrap it up. I'm just catching up on all these comments. Sorry. Yeah, I think this is a pretty good place to wrap it up. I see some more requests on stocks there. Like I see Kenview EPR. I actually talked about, if you want to know about Kenview, go check out my most recent, go to my channel. It's the most recent. It's the 3 deeply discounted dividend stocks to buy in August. If you watch that video, I talk more about Kenview there. But yeah, guys, I know if I keep going, I'll be here all night. We're making burgers for dinner, and I think those are about ready. So anyway, we are going to wrap it up here, my friends. But yeah, before I sign off for the night, I want to thank you guys so much for all the support. And thank you for hanging out with me this last hour. It was another really fun live stream. I feel like this one went by very quickly. You guys had some really good questions for sure. And that always makes it go by quick. When you get me going on these tangents, it's like the whole stream can go by there. But yeah, thank you guys once again so much for everything, all the support, all the interaction. You guys are the bomb. And I hope you guys have a great weekend. Be sure to tune into Sunday's video too. Sunday's video, I filmed it this morning. Sunday's video is going to be a pretty interesting one. So I hope you guys tune into that. Check it out. But otherwise, I hope you have a great weekend. Keep up the great work, and I'll see you in the next one.